Hello and welcome to India Today. I'm Nabila Jamal and you're watching Business Today. Let's take a quick look at the top business news this hour. Car makers gear up for a bumper festive season as sales in August return to the fast lane. Mahindra and Tata lead the charge as Maruti celebrates with a 30% sales hike. New launches and technologies bring customers to the showrooms. GST collection again tops 1.4 lakh crore for the sixth straight month on the back of economic recovery. August GST revenue collection jumps 28% year-on-year. Moody slashes India's economic growth forecast to 7.7% for 2022 amid rising interest rates, uneven monsoon and slowing global growth. Rating agency has also lowered India's GDP forecast for calendar year 2023 to 5.2%. Wild swings on Dalal Street as Sensex declines to nearly 800 points. Nifty ends below 17,600 amid global sell-off. Bank stocks along with oil and gas lead the decline. SpiceJet CFO Sanjeev Taneja resigns amid widening losses and a series of mid-air incidents. Share also slips 5% after the budget carrier posted a net loss of 789 crore rupees. In a landmark achievement in India's medical science, the country's first cervical cancer vaccine launched today. CEO of the Serum Institute, Adar Poonawalla, has said that vaccine will be available to public in just about a few months' time, will be in the range of 200 to 400 rupees. Now, the Josh is back in boardrooms of Indian car makers as customers buy all manner of automobiles in droves. In fact, the latest data of auto sales in the month of August is pointing to a bumper Diwali season, the best since COVID crashed Motown's party. Now, for consumers, the extended waiting periods for delivery may take some more time to fully abate.
New glitzy car launches. Waiting period of over a year and a half. Disappearing discounts. The auto sector is in the fast lane once again. Buyers are returning to the showrooms in droves, willingly doling out generous booking amounts for cars. A semiconductor shortage and economic uncertainty, factors which were throttling supplies as well as demand, also seem to be slowly disappearing in the rear-view mirror. The country's largest car manufacturer, Maruti Suzuki, saw a 30% jump in sales in August over last year. Tata Motors zoomed ahead with a 68% jump, while Mahindra saw a spectacular 87% increase thanks to its fresh offerings like the XUV 700, Scorpio and the Thar. The Hyundai sales rose a modest 6%, while Toyota sales were up 17% in August. Total domestic personal vehicle sales are expected to cross 3 lakh units in August, up from 2.5 lakh units in April. While revenge car shopping is a major driver of this demand, Motown is also doing its bit by launching one vehicle after another. July and August have been particularly busy months, with companies trying to stir up the market in time for the festive season. Traditionally, the 4-month period between August to November accounts for 35 to 40% of annual car sales in India. And after a disappointing 2 years, automakers have their headlights on full beam. And customers are not disappointing either. In the immediate aftermath of COVID, the waiting period for several models had reached unprecedented levels. According to industry reports, in the initial days, customers had to wait for nearly 15 months to get some variants of the Mahindra XUV 700. Maruti Suzuki has a backlog of nearly 3.8 lakh vehicles, with Ertiga seeing a waiting period of 6 months. The mini Kia Sonet has a waiting period of 11 months, while the hugely popular Hyundai Creta has a wait for 9 months. The electric Tata Nexon reportedly makes you wait for 8 months. Even the utilitarian but reliable Toyota Innova is so highly in demand that the company has had to stop booking for its diesel variant. What's further enthused the market is the impending launch of 2 strong hybrid cars into the market, the Maruti Grand Vitara and Toyota Urban Cruiser Hyryder. Promising a mileage of nearly 25 kilometers a litre, the twins have given those customers a credible environment-friendly option who are hesitant to invest in the nascent EV. Bureau Report, Business Today Television.
GST collection remained above 1.4 lakh crore rupees mark for sixth straight month. Collections from goods and services tax rose to about 28% on year to 1.43 lakh crores in August. Though there was a slight dip when compared to July. Karishma is joining us for more. Karishma, are these numbers really evident of the economic recovery? Take us through.
Well, absolutely. Another month of higher GST collections. In fact, in the month of August, gross GST revenue collections have seen a hike of 28% year-on-year basis if you compare that with 2021. In fact, in talking about numbers, the August collections stood at rupees 1,43,000 crore in a statement that has been released today morning by the Finance Ministry. For 6 months in a row, this is that collections have crossed the 1.4 lakh crore mark. In fact, Finance Minister Nirmala Sitharaman about in the month of June had also said that now government is expecting that continuously for the coming months, government will be able to collect GST revenues from states that will beyond be the 1.4 lakh crore mark. Now, clearly, better reporting of GST numbers from states in terms of revenue collection, followed by economic recovery across the country, has contributed to these good numbers. In fact, Prime Minister Narendra Modi also in his meeting with the states last month had discussed about increasing their GST revenue collections and on working on better reporting strategies. Yesterday also, the numbers, GDP numbers for Q1 were released, and in fact, Secretary Department of Economic Affairs said that the situation with India looks comparatively comfortable, and at a growth rate of 13.5% for Q1, it looks like the government is on its path of data and numbers that it had estimated during the budget and are hopeful that they will not have to depend on additional borrowing and will be able to stay on their capex plan also.
All right, Karishma, thank you very much for that analysis. Now, global credit rating agency Moody's lowered its GDP growth forecast for India to 7.7% for the calendar year 2022 due to rising interest rates, uneven monsoon and slowing global growth. Now, the global credit rating agency has also lowered India's GDP forecast for calendar year 2023 to 5.2% from 5.4%. Moody's has said that inflation remains a challenge, but with the RBI really now believing that inflationary pressures will really weaken in the second half of the year and further maybe next year. The report said the economic growth would be stronger than their projection in 2023 if at all the private sector capex cycle were to gain steam. Now, markets started the month of September on a somber note as global growth concerns weighed on investor sentiment. Sensex and Nifty that shed over 1% each. Sensex fell over 1,000 points intraday before closing down 59,000 mark. The Nifty too shed over 200 points to slip below 17,600. Losses in IT, oil and gas and FMCG shares pulled the headline indices lower. Reliance Industries tanked nearly 3% today, and other losers included Hindalco, ONGC, TCS and Sun Pharma. Auto and banking stocks lent some support today. Among the blue chip gainers were Tata Consumer, Bajaj Finserv, Asian Paints, Eicher Motors and Hero MotoCorp. Meanwhile, the rupee weakened as a surging dollar pinned down major currencies. The rupee slipped 4 paise to close at 79.5 against the US dollar. Now, questions are being raised, of course, about the financial stability of SpiceJet after a slew of setbacks in the past couple of days. The low-cost airline posted a loss of 789 crore rupees in the April-June quarter, leading to the resignation of its chief financial officer, Sanjeev Taneja. This after a loss of 458 crore rupees in January-March quarter. The airline blamed high aviation fuel prices and a weakening rupee for this massive loss. In another big setback though, aviation regulator DGCA almost deregistered 2 of its aircrafts for non-payment of dues to the lessor. Now, this takes the total number of SpiceJet aircrafts that are deregistered in August to 6. Meanwhile, another of the airline's flights reported a technical snag last night, with the Delhi-Nashik flight forced to return to Delhi due to an autopilot problem. The airline is already under regulator scrutiny for technical faults. It had been ordered by the DGCA to operate a maximum of 50% of its flights for 8 weeks. Now, India has taken a big leap in its fight against cancer, making India Atmanirbhar in the healthcare space. An indigenous vaccine for the prevention of cervical cancer has now been launched. In fact, the vaccine will be made available to people in just about a few months' time, and that too at affordable prices. So, until now, HPV vaccines have been available from foreign manufacturers at a cost approximately about 2,000 rupees to 3,500 rupees per dose. Now, this indigenously developed Cervical will cost around 200 to 400 rupees per dose. Serum Institute of India has developed this first indigenous HPV vaccine in coordination with the Department of Biotechnology. The vaccine has demonstrated a robust antibody response and can lower incidence of cancer by at least 80%. Now, in a major milestone for India, as the country accounts for about 1/5 of the global burden of cervical cancer, 1.2 lakh cases are reported every year, and around 67,000 people die of cervical cancer per year. It is the second most frequent cancer among Indian women. Now, we spoke to the CEO of Serum Institute of India, Adar Poonawala, about the vaccine the company is developing. Let's take a quick listen.
Government of India will induct this in a few months in the national program, and in a few months the vaccine will be launched, and I can assure everyone it's going to be very affordable. It's going to be substantially lower than what is available today from manufacturers across the globe. कुछ महीनों में हम announce करेंगे, शायद 200 और 400 रुपये के बीच हो सकती है, बट ये सब फाइनलाइज हम बाद में करेंगे गवर्नमेंट ऑफ इंडिया के साथ डिस्कस करने के बाद, और जब हमारा मैन्युफैक्चरिंग शुरू होगा तब हम उसके दौन पे बात कर सकते हैं. हम 2 साल के अंदर 200 मिलियन डोज तक हम बना सकते हैं. देश को तो 80-100 मिलियन डोज के ऊपर शायद ज़रूरत ना पड़े, मगर वो भी हम रैंप अप कर सकते हैं जितनी देश की ज़रूरत है, और वो हम देखेंगे 1-2 साल के बाद.
Now, with the fears of recession looming large, it is the IT sector which has been in doldrums. The sector which had gathered pace during the pandemic, losing steam now. That's the question my colleague Sakshi Basra asked while speaking to CP Gurnani, the CEO and MD of Tech Mahindra. Let's listen in to an excerpt of this conversation.
Eyes are on India at 100. Going forward from here, over the next 25 years, where will technology really take us? What is the vision that you have for tech?
Today, over these 75 years, we are known all over the world for digital transformation. My bet is at 100, we would be known for business transformation. And coincidentally, business transformation is BT.
Yes.
So you guys should at least be happy.
Absolutely.
Right? And the fact is that why I make that statement is based on a fundamental fact that you are using technology to solve a business problem or to create a new product. For both the cases, if we are now going to apply our minds to design from concept to a product, concept to a solution, I think we will be known for business transformation.
Right. But right now, sir, some fear that the IT sector is slowing down. I mean, we had this boom period. Every time there is a challenge in the world, the IT sector steps up. We've seen the kind of transformation we've seen in the pandemic, the digitalization and everything. But post that, there are fears of recession cropping up in the global world. If that happens, do you feel that there could be an impact in the outsourcing of the Indian IT firms? There could be slowing down in the order inflow and the client spends as well?
I've been part of this industry for now almost 40 years. And yes, we are part of a global ecosystem. When there is a war or when there is an inflationary trend, it does impact Indian IT. Our costs also went up, our supply chain also got impacted. So you cannot say that if Europe slows down, there will be no impact in India.
Yeah.
But my own assessment is that last 35 years have proven that the rate of growth reduces, but it is still faster than most of the industry. And personally, I am more convinced that the recession, if it happens,
Yeah.
it'll be very temporary,
Okay.
and the recovery will be equally fast.
Okay. At this moment, we are noticing that some of the global tech giants are putting the brakes on new hirings. Do you think something of that sort is happening in India?
I mean, with the kind of hiring that happened in the last 2.5 years, I think there will be a little bit of reprioritization. But I don't think we are trying to only talk about hiring.
Yeah.
We're talking about the growth. We're talking about skilling. We're talking about reskilling. We're talking about new business opportunities, whether it is quantum computing, 5G, metaverse, multiverse.
Yes.
I mean, those are the new opportunities.
Yes.
So there is a tremendous shortage of people who are ready for newer technologies. And as long as we embrace new technologies and remain relevant, I don't think there will be any slowdown.
While Coca-Cola has been around for ages now, the focus of healthy living has led to the company changing its strategy for millennials. My colleague Karishma Asudani has spoken to Hindustan Coca-Cola Beverages CEO Neeraj Garg about Coca-Cola's new India strategy. Listen in.
Coca-Cola has quite cracked the millennial code because it convinced the millennials to drink Diet Coke while everybody was talking about the sugary drinks. How do you think the strategy has worked, just from a consumer generic point of view?
I think let's step back and talk about it. The company produces products which are available for every person to make a choice. So we have a portfolio of sparkling drinks, we have a portfolio of juices, we have a portfolio of water, energy drinks, hydration products. It's a whole range available. So it's not just about trying to just walk away from a conversation, but it's about providing choice to the consumer and making sure that they can make a choice which is depending on what they would like to have and how they want to manage their hydration and refreshment needs. So sugar-free products is a part of that choice that we create. So we have Coca-Cola Zero, which is a product which tastes absolutely like the original classic Coke with sugar, but it doesn't have the same calorie impact as a Coca-Cola may have. And then we have Diet Coke, which is a much older product, or a Coca-Cola Light globally, which is a much older product which tastes a little bit different from the classic. We found that there were a lot of consumers who were looking for the same taste of Coke without the impact of the calories, and hence Coke Zero it was there to address a very clear consumer need, and we are very happy to say it's doing well not only in India but across the globe.
And I must tell you, as a 26-year-old, somebody who's a bit conscious of the fitness fact, I have also quite relied myself on the Coca-Cola diet option, and it's of course doing that justice to me. But since you did mention about the different verticals, be it the sparkling, be it the juices, be it Coca-Cola, how do you see the competition in the beverage industry in India? I mean, yours is a brand that's been there for ages, but we also have now new brands coming up, and millennials like to choose and try always the new.
So first, the competition is there. It keeps us on our toes. But more important, the challenge in India is to grow the per capita consumptions. I think the penetration of bottled beverages is still not there where it can be, if you compare it especially to some of the more developed nations in the world. And we think the opportunity is huge. Of course, over the last couple of years, shopper behavior, consumer choices have changed a lot. And you are seeing a trend of wellness and health coming in. And that is driving some more new brands to come in. Not only that, in India now with the digital world and where we are today, it's much easier for a startup brand to make themselves available to the consumer. And the bastion that the old companies in the physical world had of control over distribution and the ability to get to the real outlet is now no longer there. And it's easier for a startup to now make themselves available to the consumer, whether it's B2C or whether it's to a new distribution startup like an Udaan, which can actually get them to the outlet. So that's there. And that is why you're seeing a lot more proliferation of choices over there. But that just goes to show that India is still a vast market where there is space for a lot more brands to be there. And there are different segments of the business, whether that's the affordable serves, which start recruiting people into the beverage industry, or whether it's a more premium segment where people are looking for a specific benefit and are willing to pay for it.
That's it from me, Nabila Jamal, on Business Today. Thank you for watching.